After 30 plus years in finance, 10 of which were doing debt collection, there's one thing that I can say with confidence. Most people do not understand how credit works, how credit scores work. I'm going to share some hints and tips and some shocking guidance on how to improve your credit score. I'm going to go through the top 3 questions that I get asked about mortgages, specifically around credit. So, question number 1 is, what credit score do I need to be approved for a mortgage? Another question I get asked frequently is, why was my mortgage declined? And probably the third most asked question is, why are interest rates so high? All of these questions will be answered as we go through the conversation this evening. And if you have any questions, please do put them in the chat. So as I said, I've been in finance for over 30 years. I've done everything from debt management to wealth management to lending. So I approach mortgages and debt management and credit in a very different way than many people who have just worked in one discipline. As you know, your home may be at risk of possession if you do not keep up your mortgage repayments. So very simply put, you have to think about it. Every single mortgage is going to come down to 3 things. I call it DIC. So it's going to come down to your deposit, your income, and your credit score. So your deposit, your income, and your credit score. We'll talk about strategies that we can use to improve each of those things. We'll be talking a lot about your credit, but we'll also be talking about the deposit and the income. So one thing to keep in mind, and this is something that I discuss frequently, is there's a difference between your credit score and your credit profile. So your credit score is a numerical output. So it's a number, might be 700, 750, 800, 920, whatever. That's very different than your credit profile. So if you think about it this way, someone usually that has a high credit score will probably have a strong credit profile. But that's not always the case. I've had instances where I've had clients who have a high credit score, but because of missed payments or late payments, their credit profile is not as strong as someone who maybe has a lower credit score. So it's important to remember that if you have missed payments or late payments, for some lenders, they will not consider doing a mortgage for you if you've had a late or missed payment within the last 6 months, 12 months, 24 months. Every lender is going to be a little bit different, which is one of the values of going to a broker. A broker will be able to look at each individual lender's criteria and understand who will accept a mortgage based on a missed or late payment, CCJ, defaults, credit issues in the past. If you want to improve your chances of getting the best mortgage, if you do have any defaults, you want to make sure that you pay them off. So on your credit report, what you'll see is that you